When you think about healthcare today, there's this constant juggle, isn't there? Trying to keep costs down, but also making sure the care is, well, top-notch.
Absolutely. It's a huge challenge.
All
And
right.
it makes you look for smarter ways to do things.
Exactly. And one area that seems to be really picking up steam is how we handle medical equipment,
Yep.
not just buying it outright.
Right. Renting. It's becoming a much bigger deal than maybe people realize.
So for this deep dive, we've got our hands on a pretty fascinating report. It digs into the global medical equipment rental market.
Yeah, it's quite comprehensive, looks at the current picture, and gives projections all the way out to 2033.
Our plan really is to pull out the key insights for you, figure out what's making this market tick.
Okay, so let's dive in. The numbers themselves are, well, they tell a story right away.
They really do. For 2025, the estimate is nearly 56 billion US dollars globally. The exact figure is 55,914.5 million.
That's a substantial market already. But the growth projection is what really caught my eye.
Yeah, a compound annual growth rate, CG, of 6.20%, predicted between 2025 and 2033.
So doing the math, that pushes the market size towards what, over $90 billion by 2033? 90,473.3 million. That's significant growth.
It really is. So what's behind it? The report highlights a few main things,
Mm-hmm.
like increased healthcare spending overall,
Yeah, more investment in infrastructure, plus you see more private facilities opening up.
and sadly, the rise in chronic diseases plays a part too, people needing longer-term care solutions.
Definitely. And sort of underpinning everything is that constant search for cost effectiveness in healthcare delivery. Renting often fits that bill.
Makes sense. Okay, so where is this activity concentrated, geographically speaking?
Right. Well, North America seems to be the leader currently.
Yeah, the report gives them over 40% of the market share in 2025, so that's roughly USD 20.7 billion.
And their growth, steady, projected at 4.7% CAGR through 2033.
Within that, the U.S. is obviously the big one. Huge. Around $16.3 billion in 2025, with a 4.5% growth rate.
Yeah.
The report suggests this is really driven by, more people wanting home health care.
And managing chronic conditions outside of hospitals.
Right. Then you got Canada, smaller market, about 2.5 billion in 2025, but a slightly higher growth rate at 5.5%.
That probably links to their aging population and policies that actively support care at home.
Good point. And Mexico is significant too, nearly 1.9 billion, growing at 5.2%.
So across North America, it feels like rehabilitation is a big driver too, right? Post-surgery, injuries.
Oh, absolutely. Renting equipment for that short-term recovery phase just makes so much sense financially.
Okay, let's hop over to Europe. They're also a major piece of the puzzle.
They are indeed. Over 30% of the market in 2025, which is about $16.2 billion.
And their growth projection is solid too, 5.3% annually up to 2033. It seems a bit more varied across the continent though.
Yeah, definitely. The UK, for example, is looking at about $2.7 billion in 2025, but with a strong 6.1% growth rate. Again, likely that home healthcare push and cost savings focus.
And Germany is even bigger in value, around 3.2 billion, growing at 5.5%. Their focus seems to be on patient-centered care, especially for the elderly.
Right. And you've got France, Italy, Russia, Spain. Quite a few significant markets there.
Even some smaller countries show that trend, like Luxembourg, tiny market, maybe 195 million.
But growing at 5.6%? That's interesting.
It really points towards those financial pressures on healthcare systems across Europe, doesn't it? Making rental a more appealing strategy.
It has to be, accessing technology without that massive upfront capital investment. Okay, so let's shift focus to Asia Pacific, or APAC. The growth story there seems even more dramatic.
Oh, absolutely. Their market share is around 23% in 2025, about $13.4 billion. But the growth rate, nearly 9%, 8.9% CAGR. That's the highest regional growth predicted.
That's where things get really dynamic. China leads the region, 5.6 billion market in 2025, growing at 8.4%. Lots of government initiatives pushing healthcare accessibility there.
But look at India. Smaller market size, 1.3 million, but the highest national growth rate in the whole report, 10.8%.
Wow, that's huge. Likely driven by that combination of rising chronic diseases and the urgent need for affordable care options.
Exactly. And it's not just China and India. Japan, South Korea, Australia, Singapore, Taiwan, they're all showing really strong growth figures too.
Southeast Asia as a whole is projected at 9.7% growth. It feels like a concerted push across APAC to improve healthcare access and insurance is directly fueling this rental boom.
It makes perfect sense. Better access, better coverage, demand naturally follows.
Okay, moving on. What about South America? They hold over 5% of the market in 2025.
About $2.1 billion, with a pretty healthy growth forecast, too, 6.9% annually.
Brazil's the key player there.
Yeah, around 909 million in 2025, growing at 7.5%. And the report specifically flags the expansion of private healthcare facilities as a major boost for rentals in Brazil.
Interesting. In Argentina, smaller market, maybe 357 million, but an even higher growth rate predicted at 7.8%.
It really highlights that need for cost-effective solutions across the region. You see solid growth in Colombia, Peru, Chile, too. The private sector expansion seems key.
Flexible equipment options are clearly in demand. All right, the Middle East next. Smaller share, but growing.
Right, around 2% globally in 2025, which is about $2.2 billion. But look at the growth, 7.5% CAGR. That's quite strong.
So Saudi Arabia and the UAE are the biggest markets there, both growing fast, and Turkey and Qatar are interesting too.
Yeah, Turkey showing 8.1% growth, linked to more private hospitals. Qatar investing heavily in healthcare infrastructure.
You also wonder if that growing general awareness around health and wellness in the region plays a role too.
It likely does. It's all connected. Okay, last region, Africa. Currently the smallest share, about 1%.
That's roughly $1.2 billion in 2025, projected to grow at 6.5% annually. South Africa is the largest market.
Nigeria is mentioned too, with 6.7% growth, possibly linked to rises in non-communicable diseases.
And the report notes something specific for Africa.
The introduction of more digital and electronic equipment starting to drive the rental market there.
Yeah, bringing in newer tech. It's really fascinating seeing how different the picture is region by region based on their specific needs and healthcare setups.
Absolutely. So beyond geography, the report also breaks things down by the type of equipment being rented. What stood out there?
Well, surgical equipment seems set to remain the biggest slice of the pie.
That makes sense, right?
Yeah.
Given the sheer number of surgeries and how incredibly expensive some specialized instruments are, hospitals prefer renting for flexibility.
Exactly. But the fastest growing segment, that seems to be electronic and digital equipment.
Ah, okay. Driven by telehealth and remote monitoring?
Precisely. Remote patient monitoring systems,
Yeah.
wearable trackers, things like that. Renting makes it so much easier for providers to scale up those kinds of home healthcare or telehealth services without massive upfront costs. Gives them agility.
Yeah, adopt new tech faster. Good point. And where is this renting gear actually ending up? Is it mostly hospitals or?
The report says personal and home care rentals actually hold the largest share right now.
Really? Okay.
Yeah, aligning with that whole trend of wanting care at home. Think oxygen concentrators, hospital beds for home use, mobility aids. That's a huge driver.
But institutions, hospitals, clinics, they're also big renters.
Oh, yes. And that segment's expanding rapidly, too. Think about fluctuating patient numbers.
Like during flu season.
Exactly. Renting lets them scale up quickly for peaks like that and then scale back down without worrying about storing or maintaining equipment they don't need year-round.
Avoids the storage costs and the capital tied up.
Makes sense. Okay, so we've covered regions, types, applications. Let's zoom out again. What are the big picture drivers and maybe potential roadblocks?
Well, we've hit on the main drivers, rising chronic diseases, that major shift to home and long-term care, plus the rental companies themselves expanding their services.
Right. Any downsides or challenges mentioned?
Yeah, a couple of restraints.
Yep.
For the rental companies, the operational costs, maintenance, logistics, sterilization can be pretty high.
I can imagine.
And navigating all the different regulations and compliance standards, especially across borders, can be complex. Sure. What about key trends to watch? Where's this heading?
Technology is definitely front and center. The Internet of Things or IoT integration is huge, making equipment smarter, connected.
Allowing for better remote monitoring and management.
Exactly. And there's also a growing focus on sustainability, making equipment last longer, refurbishing, being more environmentally conscious.
That's good to hear. So how do companies compete in this space? What makes one rental provider stand out?
Seems to be a couple things. One is the range and specialization of equipment. They offer basic stuff versus highly advanced tech.
Okay.
And increasingly, it's about integrating those digital platforms we've talked about, offering data analytics, better support for telehealth, basically adding value beyond just the physical equipment.
The report even mentioned a big financial deal, TD Bank, buying First Horizon back in 2022, partly as a strategic move related to healthcare finance, perhaps indicating the perceived value here.
Yeah, moves like that definitely signal that major players see significant potential and competition is heating up.
Okay, let's try and wrap this up. If someone's just tuning in, what are the absolute core takeaways from this deep dive?
I'd say the main message is This global medical equipment rental market is big, and it's set for really significant growth over the coming decade. It's driven by a mix of healthcare needs, economic pressures, and new technology.
And we're seeing different speeds and focuses across the world, and in different segments like home care versus hospitals or surgical versus digital tech.
Exactly. And those key numbers again, nearly $56 billion in 2025, potentially growing to over $90 billion by 2033. That's a 6.2% average annual growth. It's a very dynamic area impacting healthcare delivery.
So the final thought for you, the listener, is really about the bigger implications. Considering these trends, how might this boom in renting equipment actually change healthcare access and affordability worldwide in the long run?
Yeah, and following on from that, what kinds of new, maybe more innovative rental models could emerge? Could we see subscription services, pay-per-use models become more common? It's definitely a space worth watching.